this bar right here is really significant. This is what I call a key reversal bar. This is where a stock's already been extended in an uptrend, and it's getting a little bit stretched from the moving averages. You can see historically about how much space Nvidia likes to get from those 23 EMA or 21-day simple before it starts to pull back and mean reverse. So this higher low and just watching for that after an extension down is just trying to show you, hey, focus on Nvidia. It's getting ready again. Look for an early entry up the right-hand side so you can be at a profit before it approaches that real base breakout. And this had earnings going in, and that's another reason to have cushion going into it. But look for that early entry so you can build your position and profit from a potential new uptrend. This bar right after that first undercut of the 65 EMA, the next bar is what I call a positive expectation breaker. But basically, when you have a very bad sell bar the day prior where we close at lows, we're breaking a key moving average, the next day, if we get a gap up and strong action, that's a potential trend reversal sign. Okay, welcome back everybody to another video. Today is going to be a really good one. We're going to walk through Nvidia in 2024. This is probably the liquid leader, top opportunity of the year to really make some serious gains in your portfolio with. And today we're going to walk through the different bases, the breakouts, how to manage a position, the different price and volume characteristics that both Ross and myself, key in on to help us focus on a name like this at the proper moment to enter and have it on our watch list so we're ready to actually take advantage of this opportunity. First things first, just kind of set the stage here. We're obviously in deep view here. If you want to learn more about this platform, check out the link below. But just to kind of set the stage and talk through our template, we've got the relative strength line up here. We've got just price and volume and a bunch of different moving averages. Ross can explain those in just a second, but obviously we've got volume down here and then relative measured volatility all the way here on the bottom. And that gives us a sense of how is price contracting relative to normal. It helps us identify tight price areas, which are both signs of potential accumulation, as well as potential entry points as the stock expands from that range. And here we've got the moving averages. We've got the 10 DMA simple moving average, the 21 simple as well, the 50 simple, the 200 simple, and then the 23 EMA and the 65 EMA. And you can see the different colors here as well. Obviously, and this is kind of key, these are the moving averages that Ross himself finds helpful. For you, you have to kind of decide for yourself what makes sense to you. I personally like less moving averages than Ross, but that's how I trade, and that's how how it makes sense for me. So starting with Nvidia, and we're going to kind of go through all the different bases and key price and volume characteristics of Nvidia here in this video. So starting with this first base, this is how we ended 2023 with this nice, I think, 5-month consolidation, Ross. I think that's right. And basically, it was consolidating after a really nice move up off the 2023 lows. It obviously had a really good 2023. And then this set the stage for another leg up, another part of the uptrend here starting in 2024. And this base was, I think, less than 25% deep, which after the run up that it had in 2023 is pretty tight and definitely a sign that it's still being accumulated within that base. Here we see the low of the base. We get a nice subtle upside reversal bar. It follows through to the upside, reclaims the moving averages, and then just kind of keeps contracting. You can see a higher low here, a higher low here before it gets ready for the actual breakout in this area. And we see textbook volume, action here, lower during these tight areas, these pullbacks, and then huge expansion on the actual breakout. So this is a pretty textbook base. You should definitely go back and study this. And this is kind of why we're doing this. We do this for all the top performers of each year and actually produce a model book, which the link to that and the interest page is down below in the description. We'll be posting that one for 2024 in the coming weeks. But first, taking a step back, Ross, I want to hand it over to you. Anything that you really calls your attention during the space or on the breakout that I haven't already mentioned?
But you have covered it all from, all the way from the specifics to the length and depth of the base and the reasons why. So, no, I mean, you've hit it, right? We've got what I usually see is like after you mentioned, so this shakeout to me, this undercut and rally.
That's key.
That's super key. The big volume came, you follow through, and as you're trending higher, you get that, what we refer to as the launch pad. You've got the strength making new highs ahead of price. And for what we don't have the market up, but I'm going to guess maybe for whatever reason, whatever reason this breakout didn't work and it continued to rebuild. However, as it did, you'll notice volume tapered off as it slowly pulled back to its key moving averages. The 50 and 60, 50 simple and 65 overlap here shows
Really,
clear
really good
respect,
respect.
right?
Yeah.
Continues to tighten up, and on light volume, again, like you mentioned, another higher low just above those moving averages. They don't even touch this time, and then the volume clearly comes in here. So, and this is one of those cases that, big liquid leader where you can buy it on strength. You go into a relative strength phase, and honestly,
Right.
you go look back, and if you have, I have rules around the 10 and 23 day. Going into, there's all, depending on how you played it, what your average price was, there's going to be all different things you might do individually moving into earnings here. But
Yeah, and I love how you pointed out the 50-day respect, because this is something, going back and looking at a lot of previous winners, I've really noticed this. They base out, and then when they're getting ready to actually break out and start a new leg up, they start respecting that 50-day, and it did it right here. And look at this nice tight range that formed there, clear respect as you mentioned, and then again here on this pullback on lighter volume, we respect the 50-day and don't even touch it. We get close to it, but respect it. We have two tight days, then a slight push up, and then the actual breakout. Yeah, I think this is a textbook base. You should definitely go back and study this on your own. As you mentioned, it starts an RS phase. And then I think what's really key is after the breakout, this acts perfectly. We get follow-on days of big volume, just keeps chugging higher. It respects the 10-day, which the strongest breakouts do. You also get a nice tight range here that it forms and then re-breaks out from. And then we do get this pullback. This is right before earnings, as you can see, and it respects those intermediate term moving averages. That's why we like to use the 23 EMA and 21 day simple. And then we get a nice gap up, and this keeps moving. We even get another nice range here, and this would be another consolidation pivot breakout, and then it falls through to the upside. Ross, let's keep moving forward to maybe the start of the next base there, and then go back a little bit here. And drag, yeah, that way. That's perfect. I think that's good. And to start with, this bar right here is really significant. This is what I call a key reversal bar. This is where a stock's already been extended in an uptrend, and it's getting a little bit stretched from the moving averages. You can see historically about how much space Nvidia likes to get from those 23 EMA or 21 day simple before it starts to pull back and mean reverse. And here we get stretch from the moving averages. We have a gap up, and then we break this high and just fall through to the downside and have a negative outside day. So this is what we call, again, a key reversal bar. And these are significant, especially when a stock's already been running quite some time. It doesn't mean that the run's over and it's going to roll over into a stage 4 downtrend, but what it likely means is the stock needs some time to consolidate. It needs a whole new base, which Nvidia ended up forming here, before it's ready to really make another nice momentum move. So these reversal bars are an early indication that a trend might, be waning a little bit. It might need another base, and it does reset and try to move higher. But then what does it do? It puts in a lower high and then rolls over into the base and gets extended to the downside. But Ross, anything that you've noticed a lot with these key reversal bars? Because obviously they're definitely sign. Yeah, go ahead.
No, I was just going to say, to go along with it, right? We know that the average run from one base to the next, right, is 20 to 25% on your, or I should say, on your average growth stock, right? So
And it's doubled.
Right. So you broke out
Yep.
here at 50, where if you're questioning whether, at 100, this has gone quite a ways. Yes. I mean, on the average stock moves 20 to 25%. So, there is something funny, like right around that 100% move. I don't know if it's, just like sometimes at par, that $100, like if you go through, you're off to the races, Jesse Livermore style. However, it's quite common to see a stock or something hesitate right around there. So,
Right.
maybe it's, I don't know if it, but yeah, from 50 to 100, you see that key reversal bar. It's time to start watching your shorter term moving averages closely and protect yourself for sure.
Yeah, and this, this reminds me of your story with Charles Schwab, where it gaps up and everybody's excited, everybody's rooting for it. It's on CNBC featured, and then what does it do? It reverses hard on volume, and that ends up starting a base and a pullback of, again, I think about 20-ish%, which isn't that bad. And obviously it resets, and we'll talk through that. But one thing I do want to mention is, even if you don't sell this top, which nobody's going to, maybe you get kicked out, through this low if you're a swing trader, or if you're a position trader, intermediate term trader, you wait for as it breaks the moving averages. But even if you don't get kicked out there and sell, proactively there, you can just follow the lower highs. It resets at the 10-day moving average. It sets up this other range, tries to break out, and what does it do? It fails that breakout. That's another warning sign. It wasn't able to break out through this high, and through this lower pivot, it failed right here. So these are just signs, and Ross perfectly drew that up, lower trend line. There's a lot of indications that the trend is slowing momentum. And again, that doesn't mean the stock's just going to die. What it means is it might just need another base to reset. If you're a position trader and have a great cost basis, if you bought it down here, you're likely just trying to hold through that base and respect your sell rules. Maybe it's the 65 EMA, maybe it's the 50 SMA, maybe it's the 200 SMA, depending on what your rule is. But for swing traders who like to operate like I do, base to base, you're likely out and the trend's kind of over for your time frame, and you're just waiting for another reset and an opportunity to enter up the right hand side of the new base. So Ross, I'll hand it back to you. Talking through this base, what kind of catches your eye in terms of the setup? We get another launch pad here, which is really nice. But this one really respects the 65 EMA. Maybe that's something to talk about here.
Yeah, so for starters, I meant to do that in the beginning. So like Richard says, he has fewer moving averages. And so, for the longest time, I operated with just four. I added these two, which I'm going to turn off, the 23 and 65 exponential. Those were added to my process later on. Studies were done. It was something that I observed. So these were my typical four moving averages, all simple. A lot of Mike Webster especially will tell you, use that 21-day exponential. He loves that one. I would tell you, whether you're using a 20, a 21, an exponential, or a simple, doesn't really matter. Just be consistent with what you use. It's all within tiny fractions of one another. But what I did find and learned is that very often when stocks break their 23 simple, not always, but often, they'll get support at the 23-day exponential. And the same thing with stocks that break the 50, they'll often pick up support at the 65. In this case, right, we had the one big day below. I've actually got a rule to help me with assuming this was an average I was watching as a sell point. I rarely sell on the first break below, and my rule is the only way I sell intraday the next day is if it goes underneath this low. Otherwise, I leave that alone to see if it can recover in a day or two. And you see it never undercuts that low. So on the first close below a moving average, my sell spot is the next day. If it undercuts the low again, I'm just out. And if it doesn't and it recovers, so be it. And when you're in the right stock in a strong trend, you'd be surprised. I mean, it feels horrible while you're holding, but you'd be surprised how many times you get the recovery and never look back.
And can you zoom in for a little bit? Because I want to talk about this base bottom a little bit. So zoom in on the base. Zoom in, yeah.
This way.
Yep. Yep. So this bar right after that first undercut of the 65 EMA, the next bar is what I call a positive expectation breaker. And this is, again, kind of a Mike Webster concept. I've kind of taken it and made it my own. But basically, when you have a very bad sell bar the day prior, where we close at lows, we're breaking a key moving average, the next day, if we get a gap up and strong action, that's a potential trend reversal sign, especially when we're, within a base. We're kind of had enough time since the start of the base, which is back here, that a base bottom could be putting in, so a couple of weeks at least, and we get this extension down and then a positive expectation breaker. You'll be astonished about how often, that kind of confirms that this extension down was the base low. Now, that doesn't mean you go all in. You're waiting for the next higher low. You're waiting for the launch pad. You're waiting for the reclaim of the moving averages. Whatever your buy point is up the right-hand side, a consolidation pivot, a range breakout. But this tells you to start putting it, give it some serious thought, put it on your focus list, and be watching for a potential entry and kind of be in that mindset that, hey, the base is getting more mature and it's time to start looking for potential entry points, especially in a name that, still has everything going for it in terms of earnings and sales growth. And we'll probably show that with the stats table in just a second. And so what happens next? We get a rally up. We get another bad day down, which feels really bad. Probably everybody after this bar is expecting an undercut of these lows, but we hold. And the next day we get another kind of expectation breaker where we gap down and close really strongly. And this puts in your higher low right here. That's your first higher low since the base bottom. And that's another indication to really be focused on it, even if you're not buying that day, which I think is certainly is actionable. If you're watching this closely and know Nvidia, know the story, how trading this as one of your core positions, this would be an actionable day right at the open. But even after that, you're just waiting for, after that first higher low, some type of setup. It could be a pullback back into the moving averages after reclaimed, or later on, and this is where I actually built my position, is during the range and from the next tight range. So this higher low and just watching for that after an extension down is just trying to show you, hey, focus on Nvidia. It's getting ready again. Look for an early entry up the right-hand side so you can be at a profit before it approaches that real base breakout. And this had earnings going in, and that's another reason to have cushion going into it. But look for that early entry so you can build your position and profit from a potential new uptrend. So this positive expectation breaker and then this upside reversal here, those are two key things to work out for. And even here, this bar isn't nearly as bad as this prior bar, but still we kind of get the same thing the next day where we get a gap up, positive expectation breaker, a nice close. It closes above all the moving averages. All of those are curling under price, as Ross likes to look for the launch pad. And we expand up and then form this tight range, pulls in. Look at RMV, which again just shows you, how is price action versus normal in terms of tightness. And when RMV goes down to 0, that means we're forming a tight range just like this. And often those are great spots to buy from or establish your position within the range using kind of the low of the range as your risk management level, which also lines up with a lot of the moving averages here. And you can see we expand up, form another tight range. RMV again goes to 0 right before the base breakout. So there's a lot to talk about. There's another textbook base to really study. And this is kind of a good example of a shorter base. The previous base was kind of this 5-month, 6-month base, a nice big base. And with those, we're looking for respect of the 50-day as an indication to that, it might be primed. For these shorter bases, like I said, we're looking for these higher lows and tight ranges above the moving averages. And that's what gets you excited. That's what should get you interested and ready to either position the stock at an early entry point or be ready for a potential base breakout and the start of a new trend. So I just said a bunch of stuff here, Ross. I'm sure you've got some thoughts here. I know you're pointing at the RS line. Walk me through how you're analyzing the space.
I mean, exactly like you are. I actually started accumulating it in that same spot. Like I always say, the lowest price isn't always the best price. I mean, you'll notice it's much more wide and loose in this area.
It's choppy.
Right, and you tighten up here. So while sure, I'd rather own it in the high 70s, low 80s, it's much easier to buy and hold at 90. And watching, you've got all this price support underneath you, the scrunched up moving averages that are all now trending higher. You've got your RMV screaming at you if you haven't noticed that this is really tight as it moves sideways on below average volume. So that, and then I was just pointing out here, I'm always watching relative strength. It just so happens that even before you got the moving average cross, you begin that relative strength phase, right? As you're basing, you come really close to that average, but it doesn't, I'm not looking, I mean, maybe there's a hair of pink in there, I'm not seeing it, and then the relative strength kicks in and
just takes off. Yeah.
So with the action right around there prior indicating strength, and then this is that, to me, like you did, the easiest spot to manage risk is from here.
Yeah, and that's another thing to look out for. If it starts an RS phase low in the base and then puts in a tight area, puts in a higher low, that's again definitely a signal, hey, get this on your radar. And be ready to enter or look for an entry point. Move on forward a little bit, Ross. Progress in time a little bit. So yeah, that's perfect. That's perfect. Yeah, keep it there for now. So again, we get this gap up on earnings out of the base. We act really nicely. We get a secondary gap, a real nice sign of power. We do undercut this gap a little bit, and you can see I think we even fill it a little bit if I'm not mistaken. But then we get a nice close that day off lows, and when we get the next day, we get a gap up and hold, and that starts kind of the next move higher. We form a nice tight range against the 10-day. Again, RMV goes basically to zero right during this area. This would have been a nice swing trade entry through this inside day. And then we progress higher until, what does this look like? Another key reversal bar. Another sign that, hey, a base might need to be forming. And this one actually corrects a lot harder than the previous one. Again, we're getting a little bit later in the trend here. I don't think it makes a 100% move from this base, but I think it's like 40. So it goes from 90 to 140 or so. So that's a substantial move. Again, from the base, we get another key reversal bar, correct hard down to the moving averages, find support there intermittently, but then what do? We put in a lower high again. We get another kind of key reversal bar down, and then we break below the moving averages. And this really is the sign that, hey, we need a new base, and we're watching for an extension down and then higher lows to start again. So before we move on any further, Ross, you probably want to point out the RS phase turning negative here, but anything else you want to talk through about this kind of topping process for this intermediate base?
No, that's perfect. I mean, like just like the last time, this is your warning sign. It's time to start watching, and you can see. I mean, during the run, when you scroll back, you can see the clear, big above average volume to the upside, and you can see it peters out here as you try to make highs, and then right as you start to roll over and trend lower, yeah, the relative strength phase ends actually turns negative. And I used to be a big fan of trying to hold this 50-day moving average, but in general now I'm usually out of most of my. It depends on the stock. If it's one that I've started early and have a belief that it's going, I have an upside target, which I sometimes do, rarely. And we can discuss that. It's something that I learned from Bill. But otherwise, I will usually at least sell a portion of some stock here and then watch carefully to make sure I'm out. In this case, the 50-day is right below, so maybe, depending on where I owned it, I would have played games with the 50-day instead of the 10 and or 21, 23. But otherwise, perfect. Now that once it goes into that negative relative strength phase, I become a lot less worried. I think it's going to break that 50 at that point, especially after the move that it's had from, the very beginning until now. And then, right, the most important thing from there is, and we'll see, is this. I've noticed this to be the best early buy point, like my observation 23 and 24. That undercut rally has been one of the best early buy points out there. So anyway, I'm jumping.
Yeah.
That's the next thing that I see during this correction. That's the opposite of this here, right? And this
exactly.
My observation is this has been a very what would I say? 7, 8 out of 10 times this is working.
Yep. But one more thing before we go to that, I just want to point out the changing character too. We get this bar, we get a gap down below the moving average, we get another gap down. So there's a lot of potential warning signs. The moving average is acting as resistance here. Oh, you moved it on me. All good.
I'm sorry. Yeah, I'll put it back. And I was just saying, I'll always do this too. Sometimes I'll draw the longer, and sometimes you'll get one of these, right? You'll see this steeper. A lot of times when you see that steep move break along with the moving average, that's usually a sign to get out and wait to see if you can get back in, and then you decide from there.
Exactly. No, perfect. That's well said. And one more thing I want to point out is after this bar down, it does go tight for 2 days, but kind of the reverse of this tightness expanding up. We're now in a down cycle, and RMV goes to zero right at that point, showing that price is tightening. But we expand down from that. We get this bar down, breaking those lows, this bar down, breaking those lows. And that really starts this next down cycle, which, as Ross pointed out previously, gets a very whippy, a lot of gaps, a lot of expansion of ranges, and just a change in character from the nice, steady uptrend that we were seeing. So let's move on to
and you'll notice
the bottom of the base. Yeah, go ahead.
I was just going to say, you'll notice here relative strength.
Breaking low.
Starts rolling over, making new, maybe not so much, but a little bit. I mean, I guess you could say here,
confirming it,
starting to make new lows, and then price follows, and that whole negative phase begins.
Yeah, perfect. Yeah, let's move on to this base low here, and I'll start. As Ross said, that type of bar often is the base low. It's not always the best place to buy. I personally like to wait for the higher low, but it's definitely a sign to hey, pay attention and look for a potential buy point if you're not buying that gap down. But we get a very strong close. Then what happens again? We get a negative bar and then a positive expectation breaker. Here we gap up and have a very strong close. Again, setting that higher low in motion. We get a nice expansion to the upside, reclaiming the moving averages. But this one doesn't really start the uptrend yet because this base needs a little bit more time. We form this nice shelf here for a week and a half, tight area, but then we basically break the moving averages and expand to the downside again. But what happens? We get a negative bar, another positive expectation breaker, and that starts this overall gradual move higher. You can see kind of a changing character in Nvidia here in this last base, where it's not just ripping higher, it's more of a gradual, it's shaking to the moving averages a little bit more, but still there's those signs that we're looking for at the base bottoms, at the higher lows, to tell us, hey, pay attention to Nvidia, look to accumulate a position in a tight area against a moving average, whatever your entry point is. So there's a few things out there that I notice. Ross, anything you want to add about this base bottom and the trend coming from it?
Yeah, no, and I mean, just in terms of, the exercise of marking up a model book, this is where I will tend to operate in hindsight in so much as I know, for me, the idea for me is I want to know when I'm looking at a big leader, will the rules as I've developed them around can slim work? Does it get me into and keep me in the stock, right? And that's also
Right.
how I figure out what personality works the best with my rules. So that being said, I will look back and I still go through like what we're doing here to see what happened because I want to learn. But when I'm actually marking up the model book stocks for myself, if I see an area fail, I might skip and go, because I know if I know my rules are gonna, let's say I bought them here, if I buy here and I'm not making a ton of progress before my rules, let's say kick me out here, I might skip marking it up on my model book altogether unless I thought this was something I would legitimately buy and would add to my performance before it pushed me out, if that makes
Right.
sense. That's all
Right.
I'm saying, just in terms of the exercise and making it relevant to your rules.
Yeah, perfect. And yeah, everything we're doing right now, walking through the price and volume action, just noting what's interesting, noting the patterns that we've looked for and studied in the blueprint. That's what the process that you should be doing as you mark out your own leaders and mark up your own model books. And again, our own model book will be out in the next few weeks. You can stay on the lookout to that. There's a link down below for the interest page. You'll be the first to know. But moving forward, Ross, let's go forward a little bit. NVIDIA almost sets up kind of a base on base and really loses momentum almost here, where we try to get going, we try to break through this level, we can't a few times, and obviously we'll talk about this gap down here. But it really changes character. And we can see that it's no longer ripping out of these bases. It's more gradual. It's testing the moving averages more. And the 200-day moving average, and this is what stands out to me, is getting a lot closer to price action. And what is that a sign of? That's a sign of a potential transition to a stage three where we're oscillating above and below that moving average. We don't know how NVIDIA is going to resolve to this point, but we're just aware that, it's slowing momentum. It's already had a fantastic move, and we'll just have to see where it goes from here. Stocks can retransition back to a stage two from a stage three, or they can, of course, roll over into a stage four. But Ross, before we talk about this gap down here,
Sure.
yeah, anything you notice about this area or the changing character really in the stock? I see a lot of RS negative phases because SMH kind of in general was underperforming. But anything else that really stands out to you?
No, that's it. Just that, I think I put the arrow. You'll see a lot of times if you look at the volume, it becomes obvious because the pattern for NVIDIA is when it's going to go. You usually get a clue from the volume as it's moving up. So when that volume starts to show up well below average, that's usually a clue there too. Especially
Yeah.
yeah, we got it here after earnings, right? That's the earnings catalyst. But as you're trying to push higher after that. There's really not a whole lot of volume, right? It explodes here and then you don't really get anywhere. So, I mean, it's letting you know that it's weak. And if you paid attention to the group, yeah, I mean, it was other names took over while
Yep.
NVIDIA took a breather. So there was a
Yeah.
lot things that would have let you know there, it was tired and there was better stuff, at least in the group, to look at.
And at this point, we're at a potential base low. That's kind of a base on base formation. And we do get a higher low and nice expansion up. But then what happens right after that? We get another key reversal bar down. And what happened with Nvidia the last, 3, 4 times we've had a bar like this? It needs a lot of time to kind of reset and form a whole new base. And sure enough, we get a lower high, a downside reversal bar. We don't know, this gap down is coming, but it's another sign that it's weakening. And this bar down to me on huge volume. I don't know if this is the biggest volume in the move, Ross, but it's definitely a warning sign, right? It's a sign that the character might be changing a little bit, and at the very least, Nvidia needs to reset and reform up. But how do you kind of analyze this Monday bar, which obviously had a catalyst with it, with the DeepSeek coming out and potentially not needing as much GPUs, which of course Nvidia is the key supplier. So it all comes back to fundamentals in the story, but it all shows up in the price action.
Absolutely. Yeah. So, I mean, let's see how it holds that 200-day moving average and how that news ultimately pans out, right? It came out like it was, you could call it a black swan event. And then we found out that they were actually using the more powerful H100s to train the AI. So it was kind of like a halfway. It's not, so they're not using it in the model just to train it, but they are still using those chips. How that all plays out, who knows? Nvidia obviously is well positioned as the big leader in the group. They have no shortage of money to play catch up, develop, do whatever it is they need to do. But this is the time to pay attention. The stocks will tell you if Nvidia continues to roll over and some newer chip companies pop up. That's really, like I always say, watch the leaders. Is Nvidia going to ultimately catch the 200-day and continue as that leader that builds base after base after base, or are we finally going to roll over here and have something else take over?
Yeah, but I'm noticing more of a kind of almost a launch pad to the downside here with all the moving averages stacked. And I think the 200-day, like you said, and then also this low is kind of key. Do we break this low and keep going lower, form lower highs and really start a downtrend? Or is this, close to the base low that forms here and we just reset? We don't have to predict. We just have to analyze price action in the moment and see what happens. And Ross, can you bring up the stats table just to show the earnings
Sure.
and sales growth here? Because this is kind of key. During this entire move, Nvidia had just fantastic triple-digit growth, amazing growth here. And even though it's still fantastic, 151% is definitely nothing to sneer at. We are decelerating a little bit. We're going from 450% growth to 150 to 100, and then the estimates are 62 and 49. So even though it's still growing, we are seeing just not that really explosive growth like we saw prior in the trend. It's still fantastic, but also just something to be aware of. And, I always just kind of take that with a grain of salt and defer to price action. But Ross, anything you want to mention about the earnings and sales growth with Nvidia? Because obviously it's been stellar, but, I'd be curious to hear your take on that too.
Yeah, no, I mean, yeah, I mean, you went from massive triple digits to, low triple digits, as if that's a problem, but it is several quarters of
Accelerating.
deceleration. And while estimates for any other stock in the mid double digits like this would be worth drooling on, for Nvidia, I guess you could say it's disappointing, especially on a relative basis. What I would say is that often these estimates, the further you go out, the more conservative they are. These estimates, as we see, have all been revised upward. So hopefully, we continue to see the same. But yeah, I mean, there's been a definite deceleration over the last 4 quarters, and estimates look for that trend to continue. So
Yeah. So I think ultimately, hopefully this has been helpful. Us walking through the chart, pointing out the things we see. I'm always on the lookout for these positive expectation breakers where we get a negative bar breaking a moving average, and then we get a positive expectation breaker, and that often starts a nice intermediate term move where a swing trader can get in and sell into strength. The position trader can use it to position. But hopefully the characteristics that we've talked about, the RS phases, RMV, looking for tight areas, that's the things that you should be looking up and marking up, going back and studying the greatest winners. And as I mentioned a few times, our model book of all the stocks that Ross has been working really hard on will be out in the next few weeks. And there's some great case studies from last year of all the characteristics that we just talked through and we're looking for. With Nvidia, we'll have to see how this plays out. We don't know if this gap down will be a base low, an intermediate term low, or a start of a long-term downtrend. But as we said before, we just have to let price action guide us. And if it does set up again with a nice constructive base, start respecting that 50-day again, reclaiming all the moving averages, starting a new RS phase. Ross, I think, I won't speak for you, but I'll definitely be interested because it is just a leader in the AI semi space, still has that growth, but we'll just have to let price action guide us and see what happens.
Yep, and very, very short term, my eye goes, I want, this relative strength line is very close to making a new all-time low ahead of price here, right? So
Yep.
I'm just watching that relative strength line is at least slightly leading it to new lows now. So
Yeah, bars like this and gap downs like this suggest that the stock at the very least needs time to kind of reset and heal. So we'll have to see what happens. But
yeah, buying it here and getting it right is nothing but luck, right? I mean, nobody knows what it's going to do from here. And if you thought if you had to buy some here, sure, you can manage risk, putting a sell stop at the low here, but more than likely you get shaken out for no reason is the idea, right? So.
Yeah. Perfect. Well, that's pretty much it for the video. Hopefully this was helpful. Let us know your thoughts down below. Was there any kind of key price and volume characteristics that we missed? Let us know, and we'd love to hear your thoughts. And again, stay on the lookout for the model book. You can also catch Ross every Wednesday at the TML Talk. He does a full run through of the current market environment, the key leaders, everything that's happening that week. And the link to that is down below in the description. It's a great resource and a great way to stay on top of the market and the key names to be focused on. So with that, thanks so much for watching, and we'll see you guys in future videos. Take care.